Hello, everyone. Today's Friday, the 22nd of July, 2011. Let's take a look at these markets. I've been off for the week and spending some time here getting caught up on the markets. Looks like we had a nice positive week here. The S&P 500 did finish with a 2% gain, still underneath this bigger level here it's had some trouble with 134.80, 135. 135 and a half basically, but we do see that pattern we were kind of anticipating and thinking maybe it wasn't going to happen is actually developing. What I'm talking about here is this inverted head and shoulders pattern. We've seen some lighter volume this week, but we did see again a 2% gain, and that was our first real heavy week of earnings that we've had, and I think the market's responding more to that than anything else. But there's still an overall tone of indecisiveness, and the low volume is part of that, as well as it, of course, being summer. We've still got a lot of news on the economy, the budget deal, and again, earnings are starting to really flow. They'll have a strong flow next week as well. And so far, they've been good. That's typically the trend that the companies with the strong earnings will report a little bit earlier, but we haven't seen, from what I was looking at, a lot of major disappointments. There is a real mixed response to earnings as typical, like F5, Riverbed, stocks like Storage Tech, all getting hit pretty hard here. Stocks like FLIR also getting hit hard. But then we had, of course, Google a week and a half ago. This past week, Apple, IBM, ISRG. So there's movement in both directions, but overall, obviously, we have a market where actually the S&P or the Nasdaq rather closed above its high here that it's seen for the last 10 years or so. You really have to take a look back much further in time, back to 2001. So these are basically 10-year highs that we're seeing in the Nasdaq 100. Obviously, well off the highs from the tech bubble, but still very impressive that it does continue to make new highs here. And this week we saw again the break of this resistance here about that 59.30 level, and it's a little less formed than the one in the S&P 500, but we still have a nice inverse head and shoulders pattern here. So we're above that level. Next week we'd probably want to see about 59 hold as support for the S&P 500. I think a pullback even down towards this 132, 133 area really would be the key level to hold next week. Would be 133. We're back above a rising 5-day moving average in these markets. We're above the 10, 20, and 50, etc. The Russell 2000 is a little bit of an underperformer here, but we see, taking a look at that weekly chart, we saw a pullback to the 200-day moving average. It's just kind of turning sideways in here, and if we see action similar to the Qs, similar to the S&P 500, then perhaps we'll be breaking this neckline of the inverted head and shoulders up near $86 a share in the next week or two. Short term, though, we have a little bit of resistance at about 84 and a half. That seems to have been a little bit of an area of difficulty. So I think that the key range for early next week will be if we can get above and hold above 84 and a half. If not, maybe we see a test down near 83 or that 5-day moving average. But overall, I think I look at it as a little bit more neutral. The semiconductors, we spoke about them breaking support and not getting bearish, very similar to the financials breaking support and not getting bearish. What we were talking about was an obvious level of support. When these obvious levels of support break, and we have a lot of people looking at them, a lot of times they lead to fast moves in the opposite direction. So we saw in the semiconductors, we saw a break of that 32 level this week, and subsequently we've seen a pretty strong rally. There's still a damaged group, but we got back above a little bit of resistance at about $33.30. That's the level we want to see hold as support next week. But on that daily time time frame, really kind of damaged, or maybe a little bit more neutral in here. But if you look at from failed moves come fast moves, take a look at a stock like Harley Davidson, for instance. Harley Davidson broke some support at the 200-day moving average, trap shorts, and really rallied hard. Look at Goldman Sachs. Goldman Sachs broke a new low in here, and what happened? Well, it looks like it's beginning a powerful surge that's squeezing short sellers. Anyways, back to the XLF. It's going to look similar, obviously, to Goldman Sachs, as they do trade. Well, it's not obvious maybe because it's not. It's a broker dealer, not a traditional financial. But anyways, these financials, we had seen a rejection at the trend line a week and a half ago. So 1550 would be an area we'd be looking for maybe a little bit of resistance, and then these highs right in here. The financials maybe a little bit short-term extended and a pullback down towards 1510 to 15 to 15 and a dime. We'd want to see that level hold next week. And what else do we have here? We've got gold that remains super strong here, just holding up. This is going to be a key level, 154, in the next coming days. The dollar was hit pretty hard this week, and we've spoken about, when we've got these moving averages declining, the 100-day, the 150, the 200-day moving average, they take a long time typically to reverse, and we still have a pattern in here of these lower highs in the dollar, and now we're back down to the bottom part of the range. So I'll be back in action next week, and hope everyone had a good week, and I will talk to you on Monday. Thank you.